We have with us on the show Mr. Ashok Kumar, Managing Director of Lotus Knowwealth. Ashok, good morning. Always glad to have you back on ET Now. Thank you for joining us. First, according to you, if you have to give a one-line verdict to the MCX IPO, avoid or subscribe?
It's clearly a subscribe, Nikunj. Especially for a shorter-term investor, I think it's a very clear subscribe.
What, to your mind, is the real price for the MCX IPO then?
Yeah, of course, let's build a case, Nikunj. If you look at this company, it's very clearly going to be the first mover in terms of being a listed exchange in India. Then you have the technology platform, which, puts it well above its competitors. Also the fact that the commodities market, all said and done, is a nascent market in India, so the scalability is there. On the flip side, one needs to look at the fact that this stock will not list at the NSE. Now, that's going to, impact liquidity to some extent. F&O will not be, active as it would have been if it was listing on the NSE. There's also the fact that there are a lot of regulatory issues that these kind of companies would need to comply with, so that overhang would be there. And finally, the fact that, there could be competition going ahead. So these are some of the concerns and the pluses of this issue, but clearly the pluses outweigh the negatives.
Ashok, hi, morning. Let's chat about the retail portion, because that has been oversubscribed a good 4.5 times till yesterday. Do you expect more aggressive a response from the retail as well as the HNI side once the stock lists?
Very aggressive, Aisha. I think it should be 12 to 15 times at least is what my estimate is. And, it's after a long time that there is an issue that looks worthwhile, so that there is going to be a lot of subscription coming their way. Now, that's to pick up the second part of Nikunj's question, there's going to be such heavy subscription that there would be a kind of scarcity premium when it lists. And that's going to lead to a bumper kind of listing, unless, of course, market conditions change drastically before listing. Otherwise, I think the listing is going to be extraordinarily good.
So what sort of listing gains are you expecting on day one? 10, 15% appreciation or even more?
Probably more than that, given the the number of shares that are being offered are limited. There is going to be a scarcity premium. It could be a sharp ramp-up opening. But, like I said, there are concerns, and those concerns may play out in the slightly medium to long term. So you make a fair bit of money on the first day or the first week or first month. I think it's worth taking some of it off the table.
Ashok, but what about the new SEBI listing norms, which means IPO on day one cannot appreciate more than 20% of the discovered price? So how do you see this mechanism will be applicable for the MCX IPO?
As far as the appetite for the IPO goes, I don't think it impacts. But yes, I think that's an important point, because you're not going to see a runaway price on day one because of that. But I think, Nikunj, what's going to happen is it's going to play out over a week or over a month before I think some of the concerns come home to roost. So there's going to be euphoria. The first 15 days of listing, I think, are going to be euphoric. Mind you, this is a market that's been starved of a good IPO for almost 2 years now. So it's there. I mean, you're going to find subscription across the board.
How are you mapping the valuations, Ashok, at the upper end of the price band? Does it look like it's a fair value, or does it seem like it's a little rich?
I think it's just about fair valued. It's about 19 times forward 12 and about 15 times forward 13. So I think it's just par for the course. If you look at some of the international exchanges, which are much bigger exchanges, they quoted anything around 12 to 14. So maybe there's a little bit of a premium, but mind you, this is a nascent market which is highly scalable. So perhaps that premium is justified. You know what, the only thing that concerns me a bit is that almost every positive that is possible is being priced in. Whereas, so some of the concerns, if they come home to roost, I think that the price could take a beating after the euphoric listing.
Ashok, a lot of retail investors and HNI investors, they normally like to apply for an IPO via the financing route. Now that we've got stricter norms on day one when it comes to a new listing, do you think for those who are opting to go via the financing route, they should give that a skip?
Yeah, I think, again, Nikunj, that's very interesting, because, that first day exit where you had a, open playing field where you could have a spike of as much as 50, 80, 100%, I think that's gone. So someone who's playing the financing game would obviously be looking at 15 days or thereabouts, and would probably need to do the calculation according to that. I think the subscription numbers should be very interesting. Once we have them this evening, one would know what the approximate cost with financing is going to be. But let me tell you, Nikunj, there's a huge amount of financing going on, and there is a frenzy for this issue at this moment.
What about pure retail investors who put in a 1 lakh rupee application, a 2 lakh rupee application, they end up getting 5 shares, 10 shares, depends on the final allocation. Should they hold on to those limited 5 share, 10 shares for next 1 year?
1 year may be a tricky call. Again, Nikunj, it all depends, I think, what kind of euphoria plays out in the initial period. My hunch is that if they're getting about 30-40% kick in the first 15 days or in the first 1 month, I think they should take their profits and stay on the sidelines.
Are you personally planning to apply for this IPO?
No, Nikunj, I'm not.
But if you have to advise some retail investor, what will you advise?
I think, yes, you can, but like you rightly said, you're likely to end up with 5 or 10 shares. That's like playing a lottery. I'm not too keen on doing that.
So Ashok, what could be the major risks for the MCX IPO? Do you think it's the commodity transaction tax, or do you think issues with the SEBI could actually, spring up later on?
Yeah, Aisha, the thing is that, if you look at its revenues, there's concentration across 4 commodities, and clearly the gold rush has helped MCX tremendously. If you dissect its revenues, you'll see that they get on the total value of the transaction. So if there's a correction in gold, I see MCX's revenues dropping proportionately. But having said that, some other commodity would do well, and assuming it's a commodity that is listed on the MCX, it should do well. The fact that they're not listing on the NSE, to me, is the biggest red herring. And finally, like we've spoken about, there are regulatory issues that can crop up, and typically these kind of companies sometimes trip up on regulatory issues. So my entire point is that there's a good issue, there's money to be made in the near term, but over the longer term, you need to be a little more careful.